Conflict in the Middle East has dominated price movements this week, with the bulls being firmly in charge. So let's take a look at the week's actions in some more detail. Oil prices rose sharply on Monday as conflict escalated over the weekend. Iran launched strikes across the Middle East in response to attacks by the US and Israel. Front-month Brent rose $5.89 per barrel session on session. Oil continued to climb on Tuesday as fighting in the Middle East intensified. Iran issued a statement declaring the Strait of Hormuz was closed and warned that any vessels attempting to transit would be targeted. As a result, numerous vessels were stationary on either side of the strait, which typically sees around 20% of global oil and LNG passing through on a daily basis. Prices remained volatile on Wednesday, with all eyes on tension in the Middle East. Bearish news from the weekly EIA report showing an increase in stocks did little to affect price movements. Oil climbed once again on Thursday as market participants factor the potential for a prolonged disruption to the passage of ships through the strait. Last night, front-month Brent closed at $84.4 per barrel, which is up $11.82 compared to last Friday, and the highest level seen since July 2024. Geopolitical developments over the weekend pressured prices higher on Monday. Near-term contracts surged, with front-month April gaining 32.5 pence per therm day on day. Contracts from summer 27 onwards also rose, but the extent of the gains were limited to less than 3 pence per therm. Gas continued to rise sharply on Tuesday. Qatar announced the shutdown of its Ras Laffan LNG facility following a drone attack, and loaded cargoes were taken offline as they were unable to ship through the strait. Prices retraced some of the previous day's gains on Wednesday, but remained well above the levels seen before the invasion. Reports that Iran had reached out for peace talks eased some market risk premiums, however volatility remained. All contracts rose on Thursday. At least 3 LNG tankers originally heading for Europe had been diverted towards Asia, reflecting the increased competition and logistical complexities. Last night, all contracts closed higher compared to last Friday. The biggest movement has been seen on the front 12 months, with an average increase of 32 pence per therm. Summer 27 gained 9.8 pence per therm, and summer 28 gained 1.1 pence per therm. All power contracts rose on Monday, taking direction from the wider energy complex. Near-term contracts rose sharply again on Tuesday, tracking the movements of gas. Some longer-dated contracts, however, did report some losses day on day. Most power contracts fell on Wednesday, tracking gas and carbon lower. But contracts out to and including summer 27 rose on Thursday. Contracts beyond, however, closed lower. So last night, all power contracts closed higher compared to last Friday. Summer 26 gained £23 per megawatt hour, while summer 27 gained £4.9 per megawatt hour. Thanks for watching. See you next week.